Here are 5 bubble signs that you should consider as you think about the current investing environment. Hi, my name is Gary Mishers. I'm the Managing Partner and Chief Investment Officer of Silver Ring Value Partners. I also teach the Value Investing Seminar at the FW Olin Graduate School of Business. So let's talk about these bubble signs because I think, it's important, and I'm going to let you decide for yourselves whether we're in the bubble or not, or if there are parts of the market or the economy that's in the bubble. But here are signs, and I started investing in 2001, right as professional. When I joined Fidelity as a young equity research associate right out of MIT, and I was basically growing up in college around the tech and media and technology, the TMT bubble, the internet bubble as they call it. So I kind of experienced one firsthand. I saw it implode, and I certainly studied other bubbles, certainly the 60s and the 20s and other historical bubbles as well. So I lived through one, firsthand, and then maybe we're living through another one now. So let's talk about these signs. So the first sign that I think you see typically is that investment decisions are made based on beliefs, not thorough analysis. What do I mean beliefs? People just have this passionate, almost religious-like belief about some company being good or bad, or good investment or not. None of it is supported by any evidence. And you can say, well, gee, how is that different from the usual time that the typical investor would do that much analysis? Well, whatever the depth of analysis that's typically performed, usually there is at least some attempt to estimate the value and put some numbers around it and so forth. So when you see investment decisions being made without even an attempt, and just kind of saying, oh, this company is so great, so amazing, well, would that be your thesis if it was $1 million a share, 5 million, $1 billion per share, right? At some price, that the company being amazing is no longer a sufficient reason for the investment to be a good investment, right? But when there's no thought put into comparison in price and value, or even a fig leaf attempt to kind of pretend to do it, that's a sign that we're in the bubble. It's not the only sign, but it's definitely a sign. So the second sign I think is important to keep an eye out for is when a narrow group of companies are considered to be so powerful, the business model is so amazing that mere membership in that group is enough to kind of make something a good investment. So let me give you a couple of examples. So one example is certainly, if you were an internet stock in 99, 2000, your valuation went through the roof. And, sell-side analysts in quotes in this case, justified because they were looking at price per eyeball or some contrived measure. They weren't really doing any of that. They were just saying, hey, this is an internet company. It's going up. It went up the last 6 months. It's going to go up the next 6 months. I need to raise my price target because I still want to have a buy rating on it, right? That was basically the gist of it. And, an interesting paper that was published around 2000, you guys can search for it online. It's up there. It's called arose.com by any other name. And this paper showed that the effect was so strong of being considered an internet company on a stock's valuation that when brick and mortar companies that had nothing to do with the internet added .com after their name, prices went up quite a bit, right? So it's not just an anecdotal, it was an actual paper studying this effect over a number of companies. So, in the 60s, it was the conglomerates and the Nifty 50, right? If you're either in the in-group or you're not. So there's tiering effect. By tiering, I mean there is this, glamorous tier of companies. Usually it's narrow. And then there's other stuff. And, in 99, 2000, as an example, this other stuff actually was pretty cheap. So the overall market was expensive on average, but it wasn't that every single stock was expensive. It was that you had a tiering effect where you had the internet bubble companies trading at absurd valuations, and then you had boring industrial companies trading at very cheap valuations. So a bubble doesn't mean that the market as a whole, is that everything is irrationally priced. It just means that there's a cohesive set of assets that are, completely irrationally priced. So that's another sign. Next sign is that, stories become very important as opposed to kind of financial results. You think about this rationally. Let's say you're a company and you're not earning any money. You're investing. And in some cases, you are investing. In other cases, your business model isn't that great. But in other cases, maybe your business model is good and you are investing, but still, you're not making any money. and your stock market valuation is tens or hundreds of billions of dollars. So if you're a CEO and you're going to tell a story, you're going to tell a story about what? You're going to tell a story about something other than the numbers, because you're not going to say, and our cash flow was minus $50 million this year, and the market cap was what? 200 billion? Oh, no, you're not going to say that, right? You're going to tell some story, right? So when you have, kind of this prevalence of stories around this chosen group of companies, I think that's another sign, because again, if you ask any marketer, right, the human mind is trained to respond to stories, right? We just love stories. They capture our attention. It's probably, in evolutionary sense, somehow we evolved that way from the oral tradition before we had writing, right? So stories are a way to distract us from the hard reality of the numbers. The numbers, by the way, tell their own story. And then, of course, we care about the future numbers, not just the past. And so you can make an argument that the future is going to be very different than the past. And in some cases, it will be. However, I think, again, it's the numbers that are going to tell the story, not the story kind of about some qualitative characteristics. So I think in terms of the kind of these stories, when you have very charismatic leaders, who great personalities and visions, and they're telling these stories, that's another sign, because it's people are persuaded. People are persuaded by charismatic leaders. I mean, the recent example of WeWork, right? You had a tall, handsome man, get up on stage and tell you that this real estate business model is the new Amazon for real estate, or whatever, AWS for real estate, or is a real estate platform, or whatever terminology he used. The terminology was chosen intentionally to tell you a story about a bright future that's very much removed from the current reality, right? That's the whole idea of this charismatic leader telling you a story, because they're trying to say, don't look at over here, what's happening now. Don't worry about that. Look at over there. We're going there, and it's going to be beautiful. And you want to give us more money, right? So when people tell you these stories, especially if it's about certain types of companies, and there's a number of these stories that are happening, again, that's a sign, potentially a sign of a bubble. So that's something to keep an eye out for. And then I think that the last sign that I'll point out is when the doubters, or people who've been negative on some of these potential bubble companies, have become so discredited that they're disregarded. They've been harping on this for so long. Oh my gosh, they're at it again. The whole, I love the whole shorts thing from Tesla and Elon Musk, right? I actually tried to buy some of those shorts because I think, in 5 to 10 years, they're going to be a real sign of the times. We'll see how this works out, which way it goes, but it'll be interesting. They were sold out the morning they were announced. But this whole kind of idea that these stupid people, they're these geeks who are focused on the numbers and accounting and this pesky cash flow, they don't get it, right? And no one is paying any attention. So I think that when I started at Fidelity in 2001, Fidelity had just gone through a round of PM portfolio manager changes where they got rid of a lot of value PMs who didn't get it. They did not get the new economy, the new valuation metrics, and replaced those PMs with a crop of growth-oriented analysts who became PMs, which was a promotion for them, who got it. They were younger, they were more in tune with the new world and new reality, whatever BS that it was spoken 20 years ago. And it didn't turn out so well. I'll leave the details out, but I would say I think the old people have done better over, say, a period of a 10-year period. But they didn't, because they were pessimistic, 97, 98, 99, 2000, and then by 2000, people said, you're a perma bear. You're always pessimistic, right? So that's one of the late stages of a bubble, is when these doubters who are doing analysis and are saying, wait a second, this doesn't make sense. Look at this and this number and that. They say, stop. We don't want to listen to you. One interesting anecdote that someone told me the other day is, there's a stock, everyone probably has heard of Tesla, and the stock ticker for Tesla is TSLA. By the way, I'm not recommending Tesla in any direction. I'm just using it for the purposes of a story. So there's a Tesla ticker is TSLA. There's another stock, TLSA. So instead of TSLA, TLSA, that's gone up like 3x in the recent run up that Tesla went up. Now, I'm not 100% sure. Maybe there is some company-specific thing that merited TLSA to also go up just as much. But I have a strong suspicion that there is a group of unsophisticated investors that are in such a rush to get into the Tesla story stock that they can't even check the spelling correctly, and they maybe confuse a couple of letters, and they're bidding up the wrong stock. By the way, this is not the only example of that happening. There was another example of basically a Chinese company listed in the U.S. exchange that had a name that reminded people of the FANG stocks that got bid up by 10x intraday from hundreds of millions of dollars to billions of dollars. So I think decide for yourself. These are the 5 signs, that you should keep an eye out for. And I think the details change. Yes, it is. It's always different this time, right? The details are always different, and and we can point to a number of differences, such as these business models are more powerful. A number of them are generating free cash flow. I'm not denying any of that. However, I think these signs are pretty persistent across the bubbles studied, and you're getting a lot of those signs. So I would advise caution. Just be careful out there. Make sure you're using the rational part of your brain and not falling for some story, because stories can be expensive. Well, if you like this video, please hit like below and subscribe to my YouTube channel. Thank you, guys.